The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Thursday morning. We got about 25 minutes to go until the opening bell. And, man, talk about a morning of news. We got retail sales. We got weekly unemployment claims. We'll jump over to all of it in a moment. Had started there for a second as we have so much happening this morning. But the markets picking up right where we left off basically every single day. We got markets in positive territory. The S&P's right now up 23 points, talking about 41. Do we see 4,200 anytime soon? We're talking about only 50, 60 points away from that level. We got the NASDAQ 100, 13,930, up 130 points. Quite a pullback for the NASDAQ yesterday. Put this thing on a 15-minute. You see the acceleration from 14,029 pre-market yesterday. We accelerate the entire day. I mean, that is an entire day of an acceleration. Yeah, you could argue from about 11:15 until about 12:30. We got a lift in the markets in the NASDAQ 100, but then the selling picked up yet again. You traded from above 14,000 to 13,780. So you're talking about 240 points about this index traded to the downside. But since then, I mean, talk about an acceleration in a big way. Let's just see what we've clawed back from last night. Talk about a 618 of that full move down we got yesterday. We're bumping up against that level right now, 13,925. Excuse me, the Dow, a little bit of a different story yesterday. We looked at the NASDAQ, right? A sell-off the entire day. The Dow, talk about an acceleration, and we're almost right back at the highs we were yesterday. We were just above that level slightly in the Dow. We got crude, negative 46 cents, quite the acceleration for crude yesterday, above $63. Gold catching a bid this morning. Gold up $11 at $17.47. We got to talk about Bitcoin. With the launch of Coinbase yesterday, you see Bitcoin with 65,520. We'll jump over to Coin. They were getting all the headlines yesterday. Coin. Let's put it, yeah, so that is the entirety of their public trading yesterday. You actually accelerated. Let's put it on a 5-minute for a little bit more context. Had about 10 minutes of upward action yesterday to 430. You dive to 310. We end the session at 328. Overnight, we're a little bit higher. We were as high as almost 370 or 347. Kathy Woods, the ARK ETFs, they get all the headlines. Kudos to her PR person, whoever it is. She sunk almost $250 million in this one equity yesterday. So that putting a little bit of a lift along with the market. Coinbase going to open for its second day of trading, up about $20 so far this morning. And we'll jump to notes and bonds because on that retail sales number, we got a little bit of higher price and lower yield. We got a 10-year yield now under 1.6%. You're talking about 1.594%. We got the 10-year right now at 132.07. We got the 30-year up almost a full point at 157.25. And as this market just continues higher, we get the VIX. Pretty interesting here. The VIX sitting at almost 17. Look at this VIX over the week, right? The lowest level we've reached is about 1660, and we're going all the way back to last week. Whether it was last Friday we were at that level. Well, considering, folks, if you pull up the ES, this market's climbed considerably higher. You put the ES on the chart, and we've gone from about 4,090, call it even 4,100 a week ago. We're up a solid 1% to 4,140. The VIX, pretty comfortable right now with a 16 or 17 handle on it. 1678 as we look for the open on Thursday morning. All right, let's jump over to the news stories. We'll start it off with jobless claims. State jobless claims in the U.S. fall to the lowest since March of 2020. Checking it out, we have a number of 576,000. The week ended April 10th. The Labor Department said this morning at 8:30. The prior week's data revised upward to 769,000. The median estimate was 700,000, so quite a decrease. You take a look at the chart. Bloomberg's got it here. Quite a little downtick that we saw in March for the first time. In April. That's the week ended April 10th. about under 600,000, lowest number that we've seen. Now we take that and we jump to retail sales number. This, a big one, folks. You're talking about almost 10% month on month here. Retail sales, overall sales increased last month, 9.8% in a broad advance after an upwardly revised 2.7% decline in February. The commerce figures showed Thursday. The median forecast was 5.8%. Now, this is where things get murky because I'm watching all the news this morning. They're saying, the median estimate was 5.8%. But Bloomberg, for instance, was saying Carl Riccadano, their team, they were looking for 10%. The whisper number, Bank of America, had it as high as 11%. So it comes in at 9.8%. The estimate was 5.8. But, man, look at this chart, right? That is quite an acceleration. We haven't seen anything like that since about May or even June of last year. We had January numbers at 7.7% for retail sales. Big month-on-month comps here. When you look at the month we had in February, there's a lot of weather going on in February. Some of the stimulus had basically reached its exhaustion point. You get into March, you get $1,400 stimulus checks sent out. You have the vaccine going out there at a greater level. And nonetheless, we come in at almost 10%. Going to be interesting to see where we go from there in terms of the following months. Receipts at restaurants, how about 13.4% in March? Sales at apparel retailers, 18.3%, the strongest advances since June of last year. Businesses that have been strong throughout the pandemic, including furniture outlets, building material merchants, also experienced solid March sales. Going to be really interesting to see how the winners and the losers over the last year come out of this pandemic. Let's say you got the CEO of TGI Fridays said comp sales, a key indicator of restaurant industry, turned positive in March and April over 2019 figures. It's going to be really interesting. You're going to see a lot of comps going back to 2019 because 2020, such an anomaly that not really a lot you can base off when you go year over year, especially going year over year back in April, where we were really shut down in dramatic fashion. Stimulus payments across the board. Now, gas station receipts rose 10.9%. We got gas rising in a big way. The price per gallon, $2.88 at the end of March, compared with $2.72 at the end of February. Car and motor vehicle part dealers advanced 15.1% in March, even as automakers face production constraints due to the global semiconductor shortage. Interesting stuff. Almost more interesting than that is we got like no movement almost on that number. Now, yeah, you can say, well, zoom it in. There's 830, folks. Let's zoom in even more. There's your 830 volatility, 3 to 4 S&P points. And we're basically sitting right where we were. I mean, this market is almost priced for perfection. We're going to go over some of the bank earnings stocks out there. We got Citi out there with some earnings today. We got Delta Airlines with their earnings as well. But, man, when you look at where we are, where we've come from, it's pretty remarkable in terms of this market. We get a 9.8% retail sales number, and this market, 24 points in the positive, just waiting for the open, but strong numbers. You combine that with the weekly jobless claim, under 600,000 for the first time. I'm talking about it many times, right? There's been the rhetoric. There's been the expectation. There's been the buildup for strong numbers as we come out of the pandemic, as vaccinations continue to roll out. And you're starting to see it for the first time, folks. We got March numbers, retail sales almost 10% month on month. We got a weekly jobless claims number under 600,000. Both of those pretty strong numbers. The market, though, you could say already factoring it in. Man, you put this S&P on a daily chart. It is a rocket ship to the upside, folks. You even look at a channel line that I got possible. I mean, we're just bumping up against the top line of this channel line. And this channel line is an upward trend in a big way. We're sitting at 41, 42 in the S&Ps. I mean, you just back things up to March 25th. And we were trading at 38.43. You're talking about 300 S&P points from where we were trading at March 25th, folks. That's only talking about 15 or 16 trading days, 300 S&P points. But the data is delivering, so the markets, they're positive. Stay tuned, folks. We're coming back with Kevin Hinks. We're going to talk about this market.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps positive by 24. We got the NASDAQ 100 positive by 135 points right now, bouncing back from the pullback we had yesterday. The Dow positive by 157. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern Time. Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey and the team breaking down the trades. We got so much going on this morning. I don't know where we start. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Well, I think you should start with the retail sales data, which came in so much stronger than expected. However, if you've been paying attention to the Red Book data that's been coming out the last 4 or 5 weeks, this number's not that big of a surprise, as those numbers have been monstrous each week. So, you know, when you look at these headline numbers, 9.8% retail sales, then you look at where they're coming from, it really shows that the U.S. economy is reopening, Tommy. Here's the numbers that jumped out at me. Sporting goods, hobby, musical instrument, and bookstores, up 23.5%. Food services and drinking places, 13.4% higher. Clothing and clothing accessory stores, 18.3%. So electronics and appliance stores, 10.5%. So this means that the U.S. consumer has pockets full of stimulus money, and they are out there in the world spending it.
Kevin, kudos to you, man. You've been talking about these retail sales with a little bit of a lofty expectation. You've been talking about Red Book. We come in at almost 10% month on month. And, you know, so interesting, Kevin, on so many of these numbers we get where it's a pretty muted response because the market was expecting a lofty number. We got the S&Ps up 24 points this morning, right where we came into that number. And, you know, we got, whether it's you start off retail sales, we saw weekly jobless claims under 600,000 for the first time as well. And we got, you know, Citi, we got Delta, and we got Bank of America, all with pretty decent earnings as well coming into Thursday trading on top of everything else we got going on today.
Yeah, I mean, you know, the banks have led off earnings season and have really impressed. Now, we knew that the numbers were going to be pretty strong out of them, and we knew that loan loss reserves were going to be coming back into their overall earnings. But, some of the trading revenues out of some of these names have been really impressive. Goldman Sachs, their trading revenues were really impressive. And we'll get Morgan Stanley tomorrow morning. By the way, we're covering Morgan Stanley today on Fast Market. They're more in line in terms of trading with the Goldman Sachs of the world. So we'll see if that type of strength in trading follows through to Morgan Stanley.
It's got to be a little anxious in the C-suites over at Morgan Stanley following up all these banks, man, because they've delivered in a big way. I'm sure there's some lofty expectations already but when you bat last after all these other banks, man, and they come in with some strong numbers, whether it's equity trading, right? Some of the equity trading numbers, Kevin, on some of these banks are just bananas in terms of where they come out for the quarter. And then you even see Delta. We got Delta Airlines this morning right now trading up about $1 on their earnings as well. So lots going on. What are you guys going to be talking about on the program today, Kevin?
So interesting combination of names. Obviously, in the first segment of the show, we're going to look at Morgan Stanley and their earnings coming out tomorrow morning. And then we're going to look at Harley-Davidson, HOG. And Lightfolio is going to do a presentation on Harley-Davidson. And then finally, we'll look at a name coming out with earnings tomorrow morning as well, and that is Alcoa, AA. The aluminum company. Aluminum has had a great run during this. So 3 names kind of all over the board today, but all earnings season related. Harley-Davidson is early next week, but the other 2 very soon.
And it is pretty interesting, Kevin. I had a graphic up here I was taking a look at from Bloomberg. But so we got about almost $3 trillion worth of companies reporting this week as we kick things off. Next week, we ease into things almost about just more than $5 trillion. And then the week of April 26, man, we get some of those big tech stocks. You're talking about companies valued at more than $18 trillion coming at us on April 16th as we kick into really into some of those big tech stocks in earnings season. Well, Kevin, man, we look forward to the show today. All days. I mean, there's so much, Kevin. Talk about, when stories get pushed to the bottom of the page, we have Russia sanctions out there, right? That the Russians can't even do business with banks in the U.S. anymore. And that's probably maybe the third story of the day right now, at least, if not really affecting our markets, but a pretty interesting story. But when you got retail sales at almost 10%, you got weekly jobless claims at a number we haven't seen in more than a year, and we have the markets positive as we kick things off. Kevin, we look forward to the show at 11 o'clock. And listen, we don't talk to you tomorrow. Have a great weekend, man, and we'll talk to you next week.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure as well, Kevin. Take care, man. Folks, tune in today, 11 a.m. Eastern time, every trading day. As I just talked about, we're coming into the most wonderful time of the year. We kick it off with bank earnings this week. As I just mentioned, pretty interesting when you look at next week. We got, just as I mentioned, about $5 trillion in terms of the market capitalization of companies reporting. And then, as I mentioned, to go over it briefly, and I was talking about it on my program a little bit yesterday, all right? Let's just check out some of the stocks. Now, $18 trillion, I believe it is, market capitalizations, but where are they all coming from? So we get Amazon 2 weeks from today, April 29th. We get Microsoft the same week, April 27th. We get Google, April 27th as well. Let's see, Facebook in there? Facebook's in there, April 28th. They're almost all aligned, folks. Apple's in there, April 28th. Man, that week of April 26th, folks, when you come in 2 weeks from right now, that is going to be quite a week with lofty expectations in terms of all the big tech stocks. They're all going to be reporting within about Tuesday to Thursday, let alone, as Kevin mentioned, we get some big stocks next week reporting as well, and we'll see how that all shakes out. We got about 5 minutes to go until the opening bell, and these markets continuing to show strength. We did make it as high as 41.46 initially on that 8:30 number. We got retail sales and we got weekly jobless claims at the same exact time. You're only 6 points off that level, folks. The market just waiting for the open in a big way, and we'll see where we go from there. Let's check out some of those tech stocks, as I was mentioning. You had Amazon shares with the NASDAQ 100 up 130 points. Quite the pullback in some of these equities. Now, check out Amazon. I was talking about it many times at this low, saying, man, if you were thinking about a long-term position in Amazon, you look at this consolidation, getting into this equity under $3,000, probably an area that you could begin to nibble with. Doesn't mean you get into there in a full position. But folks, sometimes it's not rocket science. I mean, look at this consolidation area and look at how we rise up to the top. Now, again, it's an art, not a science, right? We'll activate the drawing. Where's the top boundary line? Your guess is as good as mine, okay? Is it where they exactly coincide? Do you use a little bit of linear regression in there, pushing it a little bit lower? Do you really want to push it to the high that it had? Not sure that that would be the greatest area for consolidation, in my opinion. But nonetheless, folks, it's a strong area of consolidation, and it goes back all the way until July 2nd. So we're almost back to June that we've been consolidating, folks, and we're 15, 16, 17 days away from May. You're talking about almost an 11-month consolidation on Amazon. We're pushing the higher boundaries of that. You got Amazon up about $40 coming into the open this morning. Apple shares back on a 15-minute. You got Apple higher by about $1.50 to $133.60. All these tech stocks. We saw the NASDAQ 100. It was quite a sell-off yesterday. And we'll jump to some of the others as well. Microsoft shares this morning up to $257. Google shares up to $22.73. We'll check out Facebook shares up to $305.70 this morning as well. All right, folks, stay tuned. We're going to coming back for that market open. Going to be interesting to see how the market digests. Retail sales, weekly jobless claims. We got earnings coming out. We got Citi. We got Bank of America. We got Delta Airlines. I'm going to be looking at all of those when we get back in 3 minutes, folks. Stay tuned.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets positive right where we left off coming into the opening bell. The S&P is sitting at 4142. We got the Dow right now up 180 points, 33,806, right at the level of the highs of yesterday in the Dow. The Russell up about 15 points to 2260. The Russell was at the highs of yesterday. We're getting a little bit of a sell-off on the Russell right now as we speak. S&P is getting a little bit of a pop as we speak, up to 4143, and checking out the tech stocks, getting an acceleration as well. Remarkable. When you look at the NASDAQ 100, that's the Dow up 200. You look at the NASDAQ 100, clawing back. We're within about 100 points of the highs we had yesterday. That's after accelerating 240 points from 14,029 down to about 13,780 yesterday. Gold continuing to rise up to 1752 this morning, and we got to jump to notes and bonds right now. Higher price and lower yield is the trend. We're looking at a yield right now of 1.59% in that 10-year, 132.08, up 10 ticks right now. You get the 30-year up a full point at 157.28. We'll take a look at the VIX as this market opens, 1673 with that VIX pretty comfortable at the lowest levels we've seen. You put this thing on a daily, boy, talk about a breakaway, right? We were sitting, when you back things up, let's put it even on a 3-year weekly to encompass the full run from higher to lower, spiked to a high of 85 back in March as really the market collapsed during the beginning of the COVID pandemic. We had a couple highs and lows, but we weren't below $20 any time up until basically the last month. And since then, now we're sitting at about 1660, the new normal. Excuse me. Okay, let's jump around to some of the other stories we got going on this morning. As I mentioned, we got a lot. Let's jump through them. New York manufacturing, one of the stories out there. So growth at New York State manufacturers expanded in April. We're seeing so much of the stories, folks, are the fastest since 2017, the biggest since 2009, right? The lowest weekly jobless claims since more than a year ago. But that's what the market is pricing in. Don't get distracted by the fact that these numbers are all so magnificent that the market must trade higher, and it is, but a lot of this is built in, folks. You're seeing it in the way the banks are trading, and the banks are their own animals. Doesn't mean it's going to factor in when we get some of the tech stocks reporting in a couple weeks. But, man, you're getting huge numbers. You're getting retail sales month on month at almost a 10% increase, and you're getting a market that's, we're up about 25 to 30 points right now, but all things considered, this is why we're sitting at 4,100, folks, because the expectations are about as high as you can get in the S&P. We'll put that thing on a daily. You can see it. We're bumping right up to the upper boundary line of the S&P. We'll see how we react. We're sitting at about 41.46. We got records in the S&P right now. We're right up against that level in the NASDAQ, the Dow with a record as well, and the Russell right now, we're about 100 points off the high that we made March 15th in the Russell. Okay, so to finish it, New York manufacturing expanded in April at the fastest pace since 2017. The Reserve Bank of New York's General Business Condition Index advanced to 26.3 from 17.4. Figures above zero indicate expansion, and the median forecast was looking for a reading of 20, just beating everything across the board. Prices paid for materials increased 10.3 points to 74.7, the highest since July of 2008. Meanwhile, a gauge of prices received climbed to 34.9, the strongest reading in data back to 2001. So look at this. We got strongest reading in data back to 2001 for prices received. We have the strongest number since 2008 for prices paid for materials. And then we have the fastest pace since 2017 of manufacturers expanding. But folks, it all makes sense. We're in a time like we've never seen before. We better be ramping things up at an acceleration when we're coming out of a world where everybody stayed home and didn't even do anything. So of course there's going to be some lofty expectations. Okay, what else we got going on? I mentioned it to Kevin. Interesting story out here in terms of global implications, international implications. You have President Biden imposing sanctions on Russia, restricting buying new debt. So restrictions on the primary debt market to start June 14th. The U.S. targets 32 entities and individuals. The biggest headline out here is that U.S. banks will not be able to participate in initial sovereign. Well, let me put it here. Restrictions on buying new sovereign debt. I mean, that's a tough one. Russia wants to go to the market for sovereign debt. U.S. banks aren't going to be able to participate in that primary offering. Nonetheless, that's going to continue to play out as Russia, an adversary right now with the U.S., and we'll see where that goes. Jumping back to specific equities, you got Volkswagen out here. Audi, one of the brands with Volkswagen, Audi taking on Tesla's Model Y with entry-priced electric SUV. The price tag for this is what I found most remarkable. So you got Audi's new Q4 e-tron will go head-to-head with Tesla in the fast-growing market for compact crossover SUVs. That's going to try and help parent Volkswagen narrow its electric car sales gap with the world leader. So they unveiled this yesterday among a dozen models, including VW's ID4 and an electric version of the Porsche that should enable the VW Group exceed Tesla's deliveries by 2023. Now, Tesla, this isn't a knock on Tesla. They got a lot going on in their own right in terms of being an energy company, harnessing energy in a big way, which Volkswagen is probably not going to be in that business. But VW is targeting selling 600,000 battery-powered cars this year as Europe's biggest car maker seeks to gain ground on Tesla. And here's the number, folks. You're talking about $50,000 for an electric SUV. The first real competitor to Tesla, being a modest-sized SUV, hits the right segment. $50,200 in the U.S. It's going to offer as much as 323 miles of battery range. It's a good-looking vehicle there. The Q4 e-tron, again, I don't own Volkswagen. I got no interest in it, but they're a strong company, and the future is electric. And kudos to the management team over there for just upping the ante. I remember even a year or two ago that they were talking about that they wanted to have all their vehicles electric by, I think it's 2025. They were just ahead of the curve, and their stock is reacting accordingly in terms of being higher. But you start pushing out SUVs at $50,200 because the Model Y is an amazing vehicle. I've taken a look at it, but it's like $90,000 for Tesla or something. That SUV they have where the wings open, the gull wings, right? Beautiful car. But yeah, it better be beautiful when spending almost $100,000. It's a different deal when you got an Audi out there, European vehicle, $50,000, all electric. You know, Tesla better have a lot more going on than just their cars if they start getting a valuation where you got vehicles like Volkswagen coming to market at $50,000 to compete with their crossover vehicle that's about $90,000. Tesla shares basically flat today, trading at $735.55. Let's jump over to Coinbase. We got to put it on a little bit of a 15-minute. Yeah, a little bit of a sell-off from the lofty overnight prices we have. You got Coinbase up 2.8% today, within about $10 of where we closed at yesterday, $336. We'll jump over to Bitcoin right now. Bitcoin catching a little bit of a lift, up about $1,000, trading at $63,415. Okay, what else we got? Let's jump to some of the earnings. Bank of America tops estimates, Wall Street trading and banking. And, of course, they released some loan loss reserves. So, first quarter profit, $8.1 billion, 86 cents a share. The market was looking for 66 cents. They had $22.9 billion in revenue. Market was looking for 22.1. It released $2.7 billion in reserves for loan losses. Last year, the firm set aside $11.3 billion for credit losses when the market was really getting hit. Like JP Morgan and Goldman, they saw a boost from its trading operation. Fixed income trading jumped 22%. By roughly, to $3.3 billion. Equity revenue rose 10% to $1.8 billion. Just amazing numbers. But guess what, folks? You get that type of volatility. These banks, they're having a field day, and the market pricing it in accordingly. We'll take a look at some of those charts. We'll take a look at Delta with earnings as well when we come right back. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and this market just won't stop. Look at this acceleration we got going on. We got the NASDAQ 100, quite a little pop. That's the 930 bar right now. We'll put it on a 5-minute to see the action. You're accelerating from about 13,920. We're up 50 additional points in the NASDAQ 100. We're talking about a high now, just about 50 to 60 points above where we're trading at. S&P's making new highs, 41.48 in the futures. We got the Dow making new highs, 33,866. Russell up about 8 points right now. The Russell pulling back. Quite a pullback from 22.64 down about 10 points on the open to 22.53. Okay, checking out some of the other companies. So Bank of America out with their numbers. They're down about 2.8%. We got Citi out with their numbers positive. Man, these banks, talk about lofty expectations. We're going to jump to the Citi numbers. It must be a little frustrating to not even be positive by 1% when you come in with these numbers. They beat estimates on reserve release, says it's exiting 13 retail markets outside of the U.S., profit of almost $8 billion, $3.62 a share, exceeding the $2.60 estimate. Revenue of $19.3 billion. They beat by about $500 million over the revenue estimates. And so they're shuttering retail banking operations in 13 countries across Asia and parts of Europe. One of the first big strategic moves made by CEO Jane Fraser, who took over the job in February. Citi, the third biggest bank in the country, and the markets they're going after. It's interesting here. So I was taking a look at this. The bank is exiting consumer operations in Australia, Bahrain, China, India, Indonesia, Korea, Malaysia, the Philippines, Poland, Russia, Taiwan, Thailand, and Vietnam. They are planning on focusing on areas with the greatest concentration of wealth. Seems appropriate for a bank. Kudos to Fraser, the new CEO there, really making a statement. Not easy to do, but not easy being a CEO of a bank like this. You got to make bold decisions sometimes. They're exiting 13 markets. Where they're going to focus? Singapore. This is where they're going to focus its non-U.S. consumer banking operations. Singapore, Hong Kong, United Arab Emirates, and London, places with the greatest concentration of wealth. As a result of the ongoing refresh of our strategy, we've decided that we're going to double down on wealth. Hey, if you're a bank, you want to be dealing with people with money. That's the bottom line, and they're going to focus on that. And Citi, strong numbers, but giving it back, 73.60 after trading up to 75.30. What else we got? Delta Airlines, as I mentioned. I believe they're out, right, with their numbers? Yes, I believe so. We'll pull them up. Delta from 49.20 down to 47.06 so far this morning. Delta shares trading a little bit lower. Let's jump into some of the others, see where Coinbase is trading right now. Coinbase trading at 339, 340 right now on that equity. All right, what else we got going on? I can just keep going, folks. We got Pepsi out with their numbers this morning. Revenue rising 6.8% despite unbalanced economic recovery outside of the U.S. Man, a lot of what we focus on, rightfully so, is our own lives in America. We got a lot of listeners in America, but we got a lot of listeners internationally as well. And the vaccine rollout in some of these countries, I mean, even in Europe, it's struggling a bit. But, man, you really start getting across the globe. There's some countries that haven't even started yet in terms of that vaccination. We got to get everybody going. But Pepsi estimates top that number in the first quarter. Getting into the numbers, $1.21 versus $1.12. They beat on earnings by about $300 million, $14.82 billion versus $14.55 expected. First quarter net income, $1.71 billion, up from $1.34 billion a year earlier. We jump over to Pepsi shares this morning. Pepsi, within about a quarter of where we were yesterday, 142.37. Pepsi, you pull up the daily. Quite an acceleration from even where we were in January. You trade from 148.77. You break out of that downtrend in about March 19th, and since then we're trading at about 142. Taking a look at some of the other banks on the daily, I mean, this is why, folks, you're seeing some muted reactions. You better have some lofty expectations when even just since February 1st, you have Citi up $15 since February 1st. You have Bank of America since February 1st up almost 30%. Remarkable. Delta Airlines trading at $46.99. And again, these stocks, I mean, $17 back in May, but you go to where we got the efficacy of the vaccine numbers. We get the election in November. You trade from 31. We're up almost 50% from that number in Delta so far this morning. Okay, what else we got going on, folks? We got a webinar tonight with our man Basil Chapman. He will be in there with subscribers to the opening call, folks. A live webinar dressing up the charts in the Chapman wave. This should be an awesome webinar. 90 minutes from 4 till 5:30. It will demonstrate techniques that make the visuals so much easier to quickly comprehend, shown in many charts and time frames as fractals. They repeat over and over. So Basil's going to be in there with subscribers to the opening call. You can sign up for the opening call right now, folks. Basil's coming up next, live at 10 o'clock. You can sign up for a month for $149, 6 months for $695, or a year for $1195. All three of those come with a 30-day money-back guarantee. So I encourage you, if you're thinking about signing up, staying on with Basil, which you should. He's got a great service out there, folks. You can always try the 6 month. If you're not happy with it, you got 30 days for a 30-day money-back guarantee. You gain access to Basil's daily trading service, the opening call. You're going to gain access to the live webinar he's doing tonight, 90 minutes from 4 till 5:30. You also gain access to the archive webinars available. And, folks, he's got like 10 webinars in there. You can start watching them right now if you want, if you sign up for the opening call. But I encourage you to check it out. It's an awesome webinar. Like we all know, you see a chart, you see a technician put their analysis on that chart, and then when you go to do it yourself, sometimes you say, it seems so easy when they did it, but now I got a naked chart in front of me, and I can't quite figure out the nuances of when Basil's talking about his Chapman wave. Is it a new restart? Is it an A? Is that a peak C? Is it a peak D? Basil's going to be going over just chart after chart after chart after chart. He's going to draw it up. He's going to show you how he uses that for his subscribers. He's going to wipe it clean. He's going to do it again to make sure everybody understands the nuances of his trading methodology and how he uses it. I encourage you to check it out, folks. All subscribers to the opening call gain access to that already, and this webinar will be archived. So if you can't attend it live, it'll be available for opening call subscribers by tomorrow on your members page. You can watch it as many times as you would like. Okay, what else we got going on? Let's jump around to some of the stocks I like to take a look at. Disney shares, basically flat today, trading at $187.80. We got a little bit of an uptick yesterday in Disney before giving back some of the acceleration. We'll put it on a 15-minute. Disney, a little bit of volatility yesterday from about 185 to 190. We give it back with the market to 187.50. Check out some of the ride-hailing companies. You got Uber shares back above $60 at $60.09. We'll take a look at Lyft. Lyft shares at $63.19. Now, this is an interesting one. Lyft sitting in a consolidation, much like Uber, at $63.15. You pull up Uber on the daily, much the same. Uber bumping up against the upper boundary line of that consolidation. We do have Uber in my newsletter, Rocket Equities and Options. If you'd like to try that out as well, folks, we're coming into earnings season. We'll probably have some option trades at some point. We get some nice equity trades in the newsletter already. And let's jump around to some of the other ones I like to take a look at. CRM, Salesforce. They're up by about 1% today, trading at $2.50. Some of the consumer staples, McDonald's. Look at that, McDonald's. Now check this one out, folks. And I was talking about this to my subscribers already in the report I put out on Monday. I'll give you what I'm looking at here. You take a look at McDonald's. This is could be a big A to B, C to D. We had this is a weekly we're looking at. All right, you got an A point at 178 almost. You got a B point at 231. Now we've backed down slightly, but look at the acceleration we had. When you look at the volume we had last week, you're talking about 14 million shares. You look at where we were at the top, you're talking about only 9.6 million back in October. You're talking about 10.7 million back in October on the weekly as well. Rose above that level last week to 230, 281 on 14 million. You've already done 7 million. We got 2 trading days left this week. McDonald's, some strength on consumers with some stimulus. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets right where we left off, basically, in terms of the market opening bell, 41.44 on the S&Ps. We might see a pretty muted day right now. That's where it's kicking off in the first 25 minutes of trading, at least. We're trading at 41.44. The S&Ps, record territory, up about 0.6%. We got the tech stocks charging higher. We're bumping up to basically all-time highs right now. Tech stocks up 1.2% with the NASDAQ 100. You get the Dow up 0.6%, 33,841 right now. And the Russell showing some weakness, though. Russell back to 22.45. Flat on the session, but we were as high as 22.70 coming into the opening bell. All right, what else we got going on? checking out some of the action. Let's just jump around to some of the stocks that we're taking a look at. We'll continue with the action in terms of FANG stocks. Google shares this morning up 0.7%. When we get the tech stocks charging higher, you better believe it. How about Amazon? 1.6% higher. Microsoft shares up 1.3%. Microsoft pushing highs that we didn't even see intraday yesterday. We were up to 259.77 pre-market. You got Microsoft right now trading at 258.86 over any level. The highs intraday yesterday on Microsoft, 258.83. So basically right where we're trading at right now in Microsoft shares. All right, we got to check out, let's keep our eye on Coinbase. Coinbase trading at 338. We'll jump around to some of the other Reddit stocks. We got GameStop trading down 2.7%. AMC shares, look at that acceleration, up 7% right now for AMC. And we'll check out some of the Archegos saga. Discovery. Folks, my own personal perspective, I do own some Discovery at this point. If you're looking for an entry into a longer-term position, did you hear that, folks? A longer-term position, not a short-term position, because the pain may not be over. You never know when the executives at Credit Suisse might decide to sell off more of their shares, and I kid, half-wittingly, I kid. But, man, you're talking about quite a pullback to 38. We were just trading at 78. You're now back to prices that we were trading at basically January 14th. Discovery's got a bright future in the streaming world, folks. They're going nowhere. It's a real company. Right now, they are valued. Come on. The Analyze tab to fundamentals. Discovery valued at a valuation market cap of $18.5 billion. Contextually, that might be a nice entry in the longer term. You're trading at 38 right now. Discovery. Viacom, similar, but Viacom's got a lot more going on. Viacom trading at about 40 right now. All right, folks, thanks for tuning in. Stay tuned for Basil coming up next. And sign up for that opening call, folks, so you can attend that live webinar with Basil.